Hi everyone. Welcome back to yet another Power Pack session of Domain Consulting. If you have been following us for the last few videos, you would have seen that we have started our insurance journey in this channel, where the first few sessions we have had with life insurance and the different types of life insurance, like term life, whole life insurance, universal, variable universal life insurance. We have covered ULIP, so on and so forth. So after covering the life insurance journey, now we have started off with the non-life part, and we have just started with the general life insurance, with the different types of general life insurance, general insurances in the last video. And slowly we will deep dive into the different types of general insurance, and hence today we thought of covering auto insurance or automobile insurance. So we would see it in two parlances. So initially we would look at the Indian market, so to say, that what are the different types of auto insurance which are available in the Indian market, and then we will look at the international market and how the different types of insurances are called in a market like US and similar other markets. So if you look at India, the type of insurance or the type of auto insurance that you mandatorily need to have if you drive in the road is called a third party insurance, right? So what is a third party insurance? It covers the losses caused by you resulting in damage to a third party, which can be a car, a property, or another human, or anything similar, right? So this is normally mandatory in a country like India and most of the countries in the world, right? So if you drive a car, you need to definitely own a third party insurance, or otherwise you will be highly penalized. So what is a third party in easier terms? So if you hit another car or hit another property, you should be owning an insurance which you can lend to that person or that party, so that that party can claim from that insurance company to cover the losses, his or her losses, right? So you are not covering your losses in any way. In case your car is also hit, you are not getting it covered. The third person whose car or whose property or who himself has got hit and has faced losses, that person can claim from the insurance that you own in that situation. So that insurance is called a third party insurance, right? So I hope it is clear that you mandatorily need to own it if you are driving a car in India. Second type, what is own insurance, right? Own insurance covers the losses caused to your car resulting in a damage to the same, right? So basically own insurance covers the losses that has happened to your car, right? Or to you also indirectly, correct? So that's something that you, in that case, if you own insurance, in that case you yourself can claim the insurance company, and the insurance company will pay you for the losses that has occurred, right? So if you own insurance, then you can take this benefit. But own insurance is not mandatory, I would repeat, if you drive a car in India, but third party insurance is definitely mandatory. Coming to the third type, which gives you the entire coverage, is called a comprehensive insurance, right? What is a comprehensive insurance? So it covers own insurance, it covers third party insurance, and it covers any losses that happens to you or your car through flood, theft, earthquake, by any animals, by any falling trees or falling any other natural item, or through vandalism. Through any of these aspects, if anything happens to your car and you own a comprehensive insurance, then you can take full benefit of it, and the entire loss that has happened to your car can be covered. Now, normally comprehensive insurance does not cover medical expenses out of the box, but you can take a top up and you can add that also to your comprehensive insurance coverage, so that anything that has happened to you as well, and say for example if you have to be admitted to an hospital and take thorough medication, in that case that also gets covered if you cover your medical expenses in your comprehensive insurance. right? And also car accessories, right? So anything happens within your car as well to any of the car accessories, if you take that coverage as well, then it is included in your comprehensive insurance. So these are the three primary types of auto insurance which are there in Indian market. Now we would look at a more international market and say, for example, we are taking US market here as a benchmark. So in the US market, the first type of insurance that you need to have is a liability insurance. So this is very similar to what we have called a third party insurance in the Indian market. So it covers any bodily injury or property damage in an accident that is deemed for your fault, right? This would include any repair to your car and any medical cost that is involved. Sorry, not to the car that is involved, right? So basically, if a third party, third party's car is involved, then that is getting covered. Any losses that has happened to that car is getting involved, along with any medical cost that person has incurred is also getting covered in this liability insurance. So basically, this is a liability insurance for you. Any liability that has come up because if you have hit a car or hit some other thing, then in that case, if you own the liability insurance, then the third party can claim out of it. So very similar to a third party insurance that we have for Indian market. Then there's a second type which we call uninsured or underinsured motorist insurance coverage, right? So this, what it says is it protects you and any occupants in your vehicle to face any bodily injury by someone who does not fully have the coverage to cover the losses, right? So say for example, you have been hit, your car have been hit by another car, and the third person whose car has hit you does not have the full coverage to bear your losses. In that case, if your insurance coverage covers this underinsured or uninsured motorist insurance, has this, then you can claim it from your insurance company, right? So this is another type of insurance which is available in the international market. I hope I could make myself clear. Then the third type is a comprehensive insurance, which is pretty similar to the comprehensive insurance we also have in the Indian market, which is just explained that any damage or any loss that has happened due to say earthquake or a flood or say a tree falling on your car and these kind of things, right? Or say from fire, theft, etc. All these are basically covered if you have a comprehensive insurance for your motor, for your car. So in that case, it's always recommendable that if you can afford, then you should always go for a comprehensive insurance rather than only going for a third party insurance or covering or for a own insurance, right? And then there is also something called a collision insurance, which covers the repair cost of your car if you are involved in an accident, no matter whose fault it is, right? So this is specifically for a collision, right? Covers the repair cost of your car if you are involved in that accident, right? So your car is getting covered if you have a collision insurance, right? No matter whose fault it is. And then the last type of insurance in the international market that we'll look at today is uninsured motorist property damage coverage, right? So this is there was a previous type where we covered about the collision. Here we are covering the property damage, right? If you are involved in an accident with someone who is not insured, okay, your own insurance helps in this scenario to cover any property damage, right? So for example, you are involved in an accident with someone and the other person can't lend his or her insurance to you. And in that case, if you have a uninsured motorist property damage and say for example, your property is, damaged in this case, in that case, you can claim the insurance company to get the losses for your property against this insurance that you have, right? So this is another specific type of insurance that is there. So in the international market, if I just relook at it, so we have liability insurance, we have uninsured or underinsured motorist insurance, we have comprehensive insurance, we have collision insurance, and we have uninsured motorist property damage insurance, right? So these are the 5 types of insurance in the international market that we looked at. And then in the Indian market, it is a little more simpler. We have a third party insurance, we have own insurance, and we have comprehensive insurance, which covers the third party, own, and any losses that have been caused due to flood, theft, earthquake, animals, falling trees, vandalism, right? So that is what we call comprehensive insurance. So I hope you are clear that in what type of scenario you would opt for which insurance based on the region that you belong from. Now, one thing I would want to end my video today by saying is that the deductible portion of your insurance has the highest impact on the premium that you pay, right? So on an insurance where the deductible amount is low, in that case, if the deductible amount you pay out of pocket, right, before insurance starts, paying. So typically higher is the deductible, lesser is the premium, right? So if say I'll go by an example. So say for example you have met an accident where the amount of losses that you will claim for is say 1 lakh rupees, right? And then you have a deductible which is called out in your policy of say 20,000, right? So that means that 20,000 you have to pay out of your pocket, right? Deductible means the amount of money that you have to pay out of your pocket, no matter what type of accident that has happened, right? So higher is the deductible, lesser is the premium, right? So in that case, if it is a high deductible, say 20,000 or 30,000 that you have to pay out of the pocket, then the amount of premium that you pay for maintaining that auto insurance is less, right? So in that case, say for example, you are paying say 10,000 a year. But in that case, if your deductible is low, if your deductible is say 10,000 or 5,000 and majority of the premium will be covered, majority of the amount of the losses will be covered by the insurance company, then your premium per year that you pay for keeping the policy intact or in action will be higher, right? So this is more suggestion from a practical perspective that try to balance these two in your policy. Don't go for a policy which is a very high deductible also. Then in that case, when you actually need the money, you won't, the insurance company won't cover a lot. You have to pay out of your pocket, although having a policy. Don't go for a policy which is a very high deductible. Also try to see that your premium per year should not be very high, which you're not being able to afford, right? So if you have say a deductible which is very less, right, say 5,000 out of 1 lakh, it's 5,000, but then your premium is very high, which you're not being able to afford, then at the end of the day you can't afford the policy. So come to a balancing act, right, where you don't have a very high deductible and also your premium and not that high, and you are getting the kind of coverage that you are also looking for. So these are the three aspects of while you buy a auto insurance. That for most important is how much coverage you need. Second is how much you can afford. So obviously based on your affordability, you will decide the coverage, and also look at the deductible of the policy, right? Find a policy which doesn't have a lot of deductibles. In that case, in your time of need, you will actually get the money, the majority amount of the money being paid by the insurance company. So with that, I would want to close today's video. I hope it was helpful for you. So if you're liking my video and my series, then I would definitely request you to subscribe to my channel and like my videos. In the upcoming video, I am planning to come up with another non-life insurance details. Thank you.